Good morning, good afternoon, and good evening to many of us. Welcome to CEO Talk, a series conducted by CXO TV, where a CEO narrates a story and share their learning and their success of building a great brand. So today we have with us Rajat Gandhi, the founder and CEO of Faircent.com. How are you doing today, Rajat?
Excellent. Thank you for inviting me over, and good afternoon to everybody. And I'm very happy to be part of your discussion.
Awesome. So Rajat, I was just going through some of the reports, around the global P2P lending market, which is projected to experience a significant growth in the coming years. So in 2022, the market was valued at $75.5 billion, approximately, which is now expected to touch somewhere close to $130.3 billion in 2023. And furthermore, by the year 2032, the market is anticipated to achieve a value of around $621.3 billion, which is somewhat demonstrating more like a compound annual growth rate of about 28%.
Right.
So in 2013, when you started, did you thought that the market will become so big for Faircent? That is one. And second part is, could you just share the inspiration and the idea behind founding this peer-to-peer lending platform, which is Faircent, and what problem you're solving through this platform? Over to you.
Thank you. Very interesting question. We keep getting asked about this question, why we started it and where did the idea come from? And did I think that it will become such a big industry? Yes, we felt that it will become quite a big industry, but we couldn't put a number to the big. Okay, so it was just that intuitively one felt that. And I'll share the reason why we felt it will become big, not in terms of number, but in terms of consumer adoption. The insight which I started the business was, there were two things which were happening back in 2013, or the idea came somewhere around 2010. I was in a job and I had taken a home loan some time back, and as it happens that the home loan keeps on rising. You take a floating rate and it never comes down. And when you go back to the bank and ask for it to be reduced, they charge you some more money. Okay, so one didn't understand what was happening. So my background is not finance. I was not part of the finance industry. I was part of the internet industry, which was there earlier. And my background was, I had created two-sided marketplaces, C2C and B2C, like job boards, matrimony portals, your property boards. And there was another event which happened within my organization, was that at that time, just this Facebook and all had come in. And there was my colleague, a person in my team, who used to take a loan from everyone. We all have this person in our organization, right? But he used to pay back, right? And he came in and told me that he's buying a motorcycle, a Bullet. Okay. And I was quite intrigued. I said that, look, you owe money to practically half the office. How would you pay back? He said, no, I'm getting, so the price of the vehicle was around 60,000 rupees. I still remember. He said 50% my mother is giving, 30,000 rupees, and the rest I'm posting it on Facebook. And my friends and other people will give me. Okay, it was damn confident. And actually, 1 week later, he came riding on that bike. And I said, how did you get the money? He said, my friends paid, somebody gave me 5,000, somebody gave me a loan, somebody gave me a grant, and I raised this capital. That triggered me in the sense in saying that, can we connect to people from a financial point of view, wherein people create a structure where can I, maybe to this colleague, I want to give him a loan, I do it in a structured manner, right? I didn't even know at that time P2P word existed, P2P lending. So one started Googling, and then we saw that there were some early attempts being taking place in UK, US, and all that around P2P lending. It was more or less not regulated anywhere in the world. It was a legal business. It was just checked. And we felt that it was too little early in India to start back in 2009-10 because there were 2-3 big building blocks of this business. Just to give you an example, a business cannot be started unless the ecosystem is ready for it. I'll give you an example, like Uber or Ola couldn't have come before you had smartphones with everybody, with the GPS-enabled smartphone, right? And Google Maps. It was just not possible to have a Ola or Uber on an app kind of a thing. Similarly, for us, the building blocks were efficient digital payment systems, and secondly, good bureau infrastructure. Wherein, and thirdly, is the digitization of the data, whether it's your banking data and everything. And that is what is important. And these three things were not ready at that time in 2009-10. And for us, the real solution which we've set out ourselves to do, and for last 10 years, we have been doing and still continue to do, is how can we create value for the borrower? So our mission is, can we reduce the cost of capital, relative cost of capital, and the speed at which we can disburse a loan. So it's, if we can do something faster and cheaper, is what the mission is all about. And in this case, cheaper is relative. It is not like you're trying to buy a standard, say an iPhone, which is priced at 1.5 lakh rupees and you're selling at 1.3, right? There's no standard. So everybody's cost of capital is different. Two brothers living under the same roof will have a different cost of capital. So can we bring down the cost of capital relatively to what you're getting from other sources? And the thesis is simple, that can we go to the source of capital? So what happens is, in the present, not only in India, everywhere in the world, the capital is controlled by the banks, which are deposit takers. And from there, the flow of money starts, whether it is the banks themselves who lend money, or through other intermediaries like NBFCs and everybody, or other lenders. The flow of the money is simple. So we said that, can we connect directly the lender and the borrower, and it gives a higher return to the lender and a reduced cost of capital to the borrower, because we are removing the intermediaries which are existing. So this is a nutshell in 3-4 minutes. In a monologue, I've tried to explain how we started, what we did, and here we are today. And I'm happy to share we've scaled a lot in these 10 years.
Absolutely, and kudos to your colleague, for germinating that a small idea, which actually translates into such a big business now, where you have created a platform which is more like a win-win situation for both the borrowers and for lenders. So, Rajat, peer-to-peer lending has been a significant, have seen a significant growth and evolution in the recent years. How has Facent, contributed to this transformation, and what set it apart in the fintech landscape?
So from the journey has been quite exciting. So first 4-5 years, we were an unregulated business, but a legal business. Not every business has to be regulated. But we impressed upon our regulators in India, saying that, please do regulate us, because this is a financial product on one end. And in our opinion, the financial product should be regulated besides being legal, because that helps in scaling it out. And 5-6 years back in 2017-18, the regulator came out with the regulations, and we were the first ones to get the license from RBI as an NBFC P2P back in 2018. And since then, the scale has, we've started scaling out. And the initial years, of course, we were setting up the platform and everything. And our thesis was that an alternative supply of capital is required in not so good times. And unfortunately, I use the word unfortunately, our growth came and COVID happened, and our growth happened during that time. And our thesis came true, that when the traditional supply of capital is restricted, that's when alternative supply of capital starts playing, these platforms start playing a role. And I'm happy to share that even during the first lockdown, we were originating new loans every day of the lockdown. And primarily this was possible because our whole journey was a digital journey. We are a digital first platform because we came in much after. We don't have the legacy issues of brick and mortar and all that. Our underwriting and underwriting and credit models were totally digitally oriented, whether it's the data pulling and everything. Secondly, we saw a very interesting phenomena from the investors, that because it's a retail-based lending, on the one side is the retail money which is being lent out, like people like you and me. They behaved the way they behaved on the stock markets, that they were sitting at home, they were looking for high yield products. And they saw P2P lending as an interesting model to deploy their funds. And they understood that during that times, since the institutional lenders had stopped lending, or had curtailed their lending, this was an opportunity to get high quality borrowers on these platforms. So we saw quite a big interest from the lenders, and we, being true to being an exchange, we let the exchange operate. We didn't come and say that, no, don't lend money or something like that, because we felt that if there are people who want to take the risk, they should be obliged. Just like an NSE, SEBI never stopped the exchanges. So I guess that's the journey which has been there. So I'm happy to share that we've scaled out to, we've done more than nearly 4,500 crores of loans in these 5-7 years. Yeah,
Wow.
so it's
That's a very interesting, and when you talk about these figures, so what kind of a borrower split from a retail and a institutional is there? Like,
okay. So we, as per the regulations, we can't do more than 10 lakh rupees of unsecured loans. So there's only product company.
okay,
So we are concentrated more on the SME business.
Okay.
Okay, and micro SME. These
MSMEs.
Micro SMEs, not medium. So MSME is called as medium and small enterprise. We are talking about very micro, basically self people. Our average ticket size is 3 lakh rupees for 24 months. And 80% of the portfolio is these people in terms of value. In terms of volume, we do 50-50. And very interesting thing we found that we feel that this is the India which you have to invest in, because that the retail borrower and the micro SME borrower is very underpenetrated and underserved. And it generates capital. So that's the exciting part of the business, where we are impacting lives in terms of creating value for the borrower who's doing a small business and generating employment thereof. So we continue to be very aggressive on this segment of borrowers.
Okay. So now I'll just a little bit touch upon the risk management part of it. Like risk management is a critical aspect of peer-to-peer lending. Can you elaborate on the strategies and the measures Fintech employs to safeguard the interest of the lenders and borrowers?
Yeah, so there are 3-4 levels. One is at the macro level, at the systemic level, and not at the systemic level at the economy level, but how the product is structured. So there are a few things which are built into the product. One is that there's the whole concept of fractionalization which takes place. Okay, from the point of view. So it is not one-to-one matching. It is many-to-many model. It's a crowd-funded model. So if you have 1 lakh rupees, that money will get deployed to tens of thousands of borrowers. Okay. And you get a blended return across that, because that de-risks you from that perspective.
Yeah.
Then on the borrowing side, there are a few stuff which is done. We do a full evaluation of the borrower. A proper credit enhancement is evaluation is done of the borrower, which includes checking their bureau, which includes evaluating the bank statements, employment status, KYC. So it's the full 9 yards of evaluating a borrower is done from a 360 perspective. Whether how much money does he earn, what is his credit history, and we have a scoring model on top of it. Okay. And we try and understand whether he has the ability, the stability, and the intent to pay back the loan. Okay. And intent is the difficult part to understand. Stability and ability is much easier based on the data. Okay. So these are the three on one. Then we do a de-risking on the borrower from a perspective of concentration risk, whether it's from a geography point of view, industry point of view, certain type of borrowers or type of loans. Okay. So we do try and de-risk from that perspective, that because India is a country where it's a very diverse country. So you could have issues in a certain segment of industry or geography which could affect your portfolio. So for example, we service nearly 12,000 PIN codes across India. We've given out in nearly 500 locations loans. And that's how we've distributed our de-risk from a geography point of view. Similarly, we are agnostic to industry and everything. So we are a broad-based platform. So that's the de-risking which takes place. Then the whole collections mechanism is built into it through e-mandates and e-NAC and all that, so that the repayments happen seamlessly for the borrower. And of course, then we run the whole process of collection, recovery and everything. We have a calling team. We try and de-risk on that front. So it's a quite an elaborate process of de-risking from a point of view of from a product perspective, how the lender's money is distributed. Secondly, from a credential perspective, and then from a collections and from a de-risking from any kind of concentration risk. So that's broadly the model on which we operate.
Okay, so more around the credit risk assessment, and then collection and recovery mechanisms, and rating, the risk rating system. So I'm sure you must be using a lot of technology, to get this thing done. So probably I'll just put my question a little bit on the technology. How you have been leveraging the technology, to streamline peer-to-peer lending, verifying the credibility of your users and ensuring a secure and efficient platform of users, like how you do it?
Okay, so very interesting question. So we are a technology first company. So we're primarily a data analytics and a technology company than a lending company. That's what we define ourselves. So we leverage a lot of data, and this data aggregation and evaluation, these are the two parts, and the decisioning part of it is primarily led through technology. Whether it's, so to give you example, we consume more than 200 APIs across the ecosystem. Which are coming from whether it's the bureau data, banking data, then your EPFO data, ITR data. Of course, all this through consent of the borrower. And we don't ask the borrower to give any data physically to us. Okay, we just need the consent, and we do that. And we've been doing this for the last 5-7 years, leveraging various ecosystem stuff which is available right from India Stack facilities to everything, right? And that's the first part of it. Then we have a sophisticated modeling engine, including a ML engine, which on a continuous basis creates models of evaluating the borrower. So we have typically a bureau-only model, a bureau plus banking model, and plus a GST stream data model. So these are the different models which we evaluate, work on, and all this is through technology. And there's a machine learning which we don't use AI right now. I'll be upfront. We use machine learning. Okay, and so that's how the whole technology framework is built out here. I'm happy to share that when we started peer-to-peer lending, there was no third-party technology solution available on this. Okay, we were the first ones to do it. So we had no other option to build ground up. So you can imagine which started as a very simple platform of aggregating lenders and borrowers. So it is now an integrated system where right from lead management, loan management, you can imagine the whole core banking has been in-house built. A payment system, a collection system, a legal tech, and including a partner network, which includes CRM for the individual customers and for the partners. So like we have nearly 2,000 partners on the lending side and nearly 3,000 partners on the borrowing side who consume our APIs. So just to give an example, we consume nearly 250 APIs. We give out more than 300 APIs in the ecosystem. So it's become quite a sophisticated platform as we went along. So that's how the whole.
Wow. I'll not be surprised, if probably, you Facent pivot, or I would say, build up its tech arm, something like what Amazon did with AWS.
Yeah, I think we're all smart, but yeah, that's every entrepreneur's dream to see if they can do that kind of bill. Monitor alcohol.
So in the light of regulatory changes and evolving financial norms, how do you see the peer-to-peer lending industry in India evolving over the next few years, and how Facent preparing for these changes?
Look, so the industry is, so the regulation has been quite stable for the last 4-5 years. There's no change as such out there, besides the ecosystem changes which we are affected through, which apply to all the NBFCs like digital lending guidelines and those kind of things. Regulator has been at the industry level trying to create more guardrails around customer protection, especially on the borrowing side. Specifically for P2P, there's nothing which has come out in the recent time. But we see that there are opportunities with the models coming in, with certain new things coming in, especially around securitization, which we could leverage because that is not available in the guidelines. Then around secured lending, which is something which is there, and wherein we could do products like LAP, which is primarily for the business borrower, which is an interesting product.
Okay.
And that's something which we could impress upon the regulators if they could come out with that. So I think there are few things which are opportunities, the kind of good growth and yeoman service which the industry has done in the last 2-3 years, especially during COVID. Not only us, other platforms also thrived during this time. And they really created credit lines for the needy borrowers. So I think there is a time now to take the industry to the next level. And we're trying to impress upon with the regulator on these aspects.
Okay, sounds good. So, Fintech has facilitated, loans to various for the various purposes. For personal needs to small business growth, could you just share some recent business achievements, including India and the global footprint, revenue growth, market share, and some success stories?
Our business growth and all?
Business growth, a little bit on the market share, some success stories, and
I wouldn't know what the market share. We are one of the largest players. Exact data is there's no third party data. Is not be good on my part to start putting numbers without validation of the third party because it's a public forum. Internally, we know we are in the one of the top 1 or 2 in terms of how we've grown. Having said that. In terms of growth, we've been growing at nearly 100% year on year, at least for last 4-5 years, which in the business is very healthy growth rates. At times we feel that, okay, maybe we should taper it off a little bit because too much growth at this high speed may not be conducive for the portfolio health. But because we have a very high eye on we're very focused on the portfolio health on a continuous basis. So that's how we are looking at it. And given that the fact that we are a single product company, unsecured loans up to 10 lakh rupees, among the digital lenders, all the digital lenders, which are fintechs, I think we would be in the top 5-7 of them in the kind of volume.
Okay, sounds good. Sounds good. Anything on the expansion plan? What kind of expansion plan you have, and are you looking to focus beyond the geo like India?
Yeah, so we have been exploring certain opportunities or evaluating. Right now, it's all at the drawing board stage, including looking at different markets like Southeast Asia, Middle East, or Africa, because that's where I think P2P lending or this kind of a lending platform will thrive. Mature markets, I do not know because those are too sensitive for that. They are very well penetrated by other institutional lenders. So I think our product is more conducive for a market like Africa, Southeast Asia. These are very early stage internal discussions happening. Can we look at that? Then of course we are looking at other models within the ecosystem which are evolving. What other products can we add on to the thing? Both on the supply side and demand side. So supply side is typically competes with the wealth tech companies. So there is an opportunity out there because we have very HNI level of investors. Just to share, nearly our average ticket size on the lender side is 8.5 lakh rupees. Okay. So which is quite a big corpus of money which has been deployed on our platform. Considering average investment sizes in India are sub 1 lakh rupees. Okay. Similarly, in the borrowing side, we are looking at various opportunities. How can we monetize the borrower from a lifetime point of view, whether within this model or some other model. So those are the other opportunities which we are exploring right now, but they are all at the early stage of discussion within the organization.
Okay. So, looking ahead, what innovation and opportunity do you anticipate for P2P lending industry in India, and how would you plan to capitalize on these prospects?
I think there are 2-3 parts to it. So innovation, look, in financial products, there are 2 parts to the innovation. One is the technology innovation which you bring to the table, whether how the user flows happen, how you capture data, what are the alternative supplies of data which you can create within the which is available within the ecosystem, or we could capture for ourselves. The second is the financial products thereof on top of it, and so there are 2-3 opportunities which we are looking at, especially around loan against property and those kind of things. I think that's where somewhere there's a lot of digitized data available which starting to come in. Whether it's the land record data, whether it's other data with related to the property, I think that industry is set for disruption, because right now all the work has happened in around unsecured personal loan or business loan. Okay, because why it happened was because there's availability of a lot of data available out there, whether it's your bureau data, whether it's your banking data, whether it's your GST data, which enabled a lot of digital lenders like ourselves to evaluate the borrower from that prism based on data. Rest of the secured products are still right now primarily offline and not too much technology being used out there. And we being a technology first company, we feel that we can leverage that innovation. We can bring in certain amount of innovation in these products. How do we get them funded? How those things? And those are things which have to be worked out. We could, but I think there's a big ecosystem player out there where these technologies and innovation can be brought onto these onboarding these kind of loans.
Absolutely. So as the P2P lending business grows and evolves, regulators and industry participants must work together to create a strong regulatory framework that stimulate innovation, protect consumers, and assures the lending ecosystem stability. The rise of peer-to-peer lending platform represent a fundamental shift in lending practices, allowing individuals and business to participate in the direct lending and borrowing transition outside the purview of traditional financial institute. With this, we come to the end of this episode. Thanks, Rajat, for such an insightful session. We really had a pleasure interacting with you.
Thank you, sir. It was a pleasure interacting with you.
Same here, same here.
For more updates from CXO TV, please like and subscribe to our channel.